Hi, it's Sean Haynes with the Agri CFO, talking for the Ag Center, kind of going through our weekly commodity reports. Thanks for listening to them. We're trying to do the best job we can. It's not my professional job, but I watch a lot of these numbers. I have some insight and some thoughts on it. If you want to hear more, have questions, feel free to send them to us. And, as always, please click and like and share these posts, kind of get them out there so we can kind of broaden the audience and also broaden the feedback, which I like a lot. I just want to give a quick disclaimer or kind of public statement about the dairy business right here in California as well as the rest of the United States right now. These guys are going through a really tough time, probably as bad, if not as bad as 2009, where cost of production are $4 to $6 per hundredweight greater than what they're actually getting for the milk. And just as a public opinion or my personal opinion on this dairy markets, it's just tough watching these guys go through the volatility year over year. You're having the greatest milk prices ever one year and the next year being in the worst prices ever. And it's taxing on them mentally. I deal with a lot of these guys on a consulting basis, on a regular basis, seeing them once a week, going over numbers, figuring out break even is how we're going to finance these losses and make ourselves better for when the things turn around to kind of get ourselves right again. But maybe it's time, in my opinion, to start talking about how we price this milk and stop taking advantage of California and U.S. farmers and their work, right? When I look at these store values for milk prices, fluid milk and butter and cheese, they just haven't moved realistically haven't moved, despite the fact that dairymen at the home have been making 40%, 50%, not quite 50%, but 40% less for their milk in some cases. It just doesn't seem really fair. And maybe it's time to start talking about having a milk pricing system that says, hey, here's the retail price of milk products, and here's the value that the dairymen get, and they move together, right? There's some kind of calculation that says, hey, it can't be, the retail price in the store can't be X amount of dollars more than what a dairyman makes at the farm level. Just from a fairness perspective, it's a perishable crop. They can't do anything with it. If they don't sell it that morning, it's bad and they got to dump it. If they even dump it, and the sad thing is, even if they did dump it, they'd be told that it's a hazmat issue when they did. So it seems to be a really tough market for a commodity that we really all need and enjoy here in the United States. And I think these guys are really kind of under the thumb as far as a fairness perspective on how they get paid for their product. You could say that about a lot of products in the U.S. Markets, but not many have the volatility these guys have been experiencing in the past few years. So if you have dairyman friends, please realize they're going through a tough time. Tell them you appreciate all the hard work that they do. I do. And just kind of wanted to say that before we got into our market segments this week. So to start off, here's dairy markets. Dairy prices continue to fall and soften. Class 3 prices in the market due to just an oversupply of cheap cheese back east. Kind of same story, different day. Excess milk being produced in the United States versus demand. It's kind of flowing into these cheese markets mostly because most of that extra production is back east, and that's the cheese plants back there that are mostly processing that milk. If you look at the current price on the spot market for that milk back east and what they're trading it for, it looks like another 30 to 40 cents drop in milk price on the class 3 side, which would translate to 15 to 20 cent decrease again on the blend coming out here in California. Blend for California finalized for June last week at about $15.92, so we fell below that $16 per hundredweight mark on the total blend price. Next month, i.e. July, payments look like they're down in the $15.07 range. Which is just rough, and then pop back up in the mid-15s and then up to mid-16s again by September. Still well below what guys are producing milk for at the $19.50, $20 per hundredweight range, but at least be some relief there. Dairy cattle still staying strong on the price side, 90 cents to $1.10 for really good quality cull cows. Holstein bull calves in the 225 to 250 range, and then these beef on dairy cross cattle are still the 475 to 550 range, depending on what the quality of the cattle are and whether it's a steer or a heifer. So still some money to be made there. Makes me wonder too, with these low milk prices and low milk prices and high beef prices, if those are going to kind of confluence here pretty soon, and guys are just going to call down these cows in response to these low milk prices to take advantage of these higher beef checks, and hopefully maybe see a decrease in milk production capacity coming in these upcoming months. So I'm still waiting to see what that looks like, if it's going to happen in the next couple of reports. I haven't seen it yet, but you're hoping in a weird way that would happen. On the feed cost side, feed costs coming down. New crop almond hulls as low as 125 up to about 145, depending where we are in the market. Hay continues to stay low on the forage side at that 130 to 170 range for wheat and triticale hay and things like that. Alfalfa hay is off a little bit. Test hay is getting a little easier to find because the weather's been so nice up till now, so we got some cuts off. That's been trading $100 off of last last year. And then medium quality, fair quality, good quality alfalfa's at, anywhere from 250 to 330 range, depending where you're buying it from. So feed costs will come off a little bit. Guys are behind hand to mouth. We'll see where that kind of lands out when that resets this September. Corn was coming off for quite a bit because the USDA planted acres were much more than ever expected. And now we've got kind of this reversal a little bit with Russia canceling the program with the Ukraine. It's kind of pushed all grains up, especially wheat in the market. We'll see where that floats out. But corn was trading a little bit below $5 a bushel for the first time in a long time. Now we're in the 515, 520 range. So we'll see where we end up. So in the short, milk prices look to be really tight for a while until we get some correction in flow coming out of the Midwest through some culling of the dairy cattle, possibly feed costs coming down a little bit in the third, fourth quarter of this year as they kind of reset, and then just continue to watch what's going to happen with the Ukraine and Russia as far as grains go. So that's the tough story for dairy this week. Now on to the brighter market of the beef here in California. Beef continued to trade up a little bit this week, sitting in the 275 range for 4.5 weight beef on dairy Holstein crosses, about 25 cents off for that for heifers. Upfront cash markets have been north of $3 per pound on the same cattle. So beef prices continue to be high in response to kind of low animal as far as inventory goes, continuing demand from the marketplace for those cattle. Box beef has come off a little bit though in the past week after the 4th of July holiday. It tends to trend down a little bit, so you get some squeezing pressure from the retail side as people get off of buying steaks, some of these other cuts they bought for the 4th of July holiday coming into Labor Day after all that. So usually August, you start to see mid-August a little seasonal sweep up. So we'll see if we see that. At box beef, about 308 for choice. It's about 13 cents per pound off from where it was before. The value of these cattle coming into the feed yards at in the $500 range to $550 range for these beef on dairy crosses, it's going to put some real pressure on some of these packers at the end to make margins. Most of the feed yards are making money on the cattle, but the packers are really going to kind of get squeezed between the dropping retail value and the increasing calf value on the other side. So hopefully we see response to the retail side, which I think will happen as we get later in the season. Back east, continue to have some drought issues. They've gotten a lot of moisture in the back east, which should help with grass conditions and maybe incentivize some guys to put some additional replacements on come the fall. We'll have to see right now, but right now the herd remains small and not with a lot of replacement activity going on as far as retaining heifers going. One sore spot is it continues to have drought conditions in the Missouri area, which most people don't think about, but Missouri is like the number 3 cattle state in the United States. And so you kind of want to have them to have a lot of grass as well to kind of incentivize and build this herd back up again. But, going forward into the late summer, early fall, that's going to be what people are watching, I think, to see if we're going to be able to put some additional pressure on these upper prices for cattle. Because if guys decide to, hey, wholesale, I've got lots of grass on the ground, moisture was good, I've got a lot of heifers that just got calved out, or I had some heifers that are really getting ready to market, and I go ahead and retain those animals and maybe retain some cattle that I would call off normally, like these older cattle, that in response to prices to try to expand that herd for next year's calving is going to pull cattle out of the market, right? That were normally going to the feed yards. So a lot of us are kind of watching what those conditions are doing for grass and moisture back east as well as out here, and seeing what guys are doing with replacement heifers as far as retention or cull animals on those cows that would normally go to market and be called off. Maybe I try to get her bred for another year, right? So we'll see what that does. Feed them. Animals on placement reports can come out in the next 10 days or so. So that'll kind of give us some indication. Those numbers are off about 4% year to date, and then 12% from last year as far as numbers of cattle on feed. They're down, those numbers, which is translating to less beef available. So we'll see in this next report if that trend continues or even accelerates if guys have just decided to keep those heifers out of the channel. So that's the happy story for beef here in California. And let's get on to the crop update. Man, it's been a hot week, putting a lot of stress on some crops, way up 105 to 115 degrees, depending where you're at in the market place lately. So guys have been really trying to get the hay down in the early mornings. We're watching these crops really tight to look for moisture stress, but it's been needed. So we need this extra heat to kind of get these degree days up, to get these corn going, to get these tomatoes to set and what have you. So it's not all of a bad thing. It's going to be tough on the dairy cattle side, but I think in the long range, that'll make help with them as well. So hay prices staying pretty consistent, forage prices in the 130 to 170 range for forage hays, oat, wheat, triticale, things like that. Alfalfa has been softening a little bit on the test hay side. We've had some really early mild weather that allowed us to produce some test hay that we weren't normally expecting, offset some of that lost test hay by being so late with the wet season we had in the beginning of the year. And so I think that's going to be nice to see for some of these dairymen. That was off about $100 from last year. You're looking for good to fair quality hay in the anywhere from $250 to $330 range, depending on where you're buying and what the quality is. But it's off. Guys are buying hand to mouth. There's a lot of stress in the dairy markets right now, so that's putting some pressure on inventories with these hay guys and cash flow, where maybe they're kind of discounting hay to move it out a little bit quicker to keep themselves liquid. Silage side, no changes there. Just as an update for anybody who's listened before, we're $45 to $55 per ton in the field for corn silage in the north part of the valley, and for the south part of the valley, a little higher, $55 to $62 per ton because of competition down there. About $20 less than last year, which is good for the for the dairy farmers. Not so great for the farming side, but still a decent price for most of the guys out there. Cherry crop finished out pretty decent. Large size crop toward the end of the season had a lot more stress. Quality was an issue, and sizing up was an issue for anybody. So you either had a really good crop or you had some issues like that. But it brought break-even pricing on the average down to $20, $25 per box, where in the beginning of the season, it made about $40 per box. Strawberries continue to stay strong at the $10 conventional, $16 organic range. Production year-to-date versus last year is about 23% off. Looks like we have some lost acreage, like I said before. That season's kind of just got done peaking and should slope off for the rest of the year and getting crops someplace else. Tomato crop looks good, but late. Hopefully these degrees kind of set things up. Canopy looks good. Really looking to see some berries set on these crops. We haven't really seen a lot of that yet. Pricing looks good. And I think a lot of people don't really realize that on the tomato crop side, there's quite a bit of tomatoes that get produced out of Ukraine through that company called AgriFusion. And there's a lot of questions about whether or not they'll be able to produce a crop this year with the ongoing war there, as well as China's issues with irrigation and things like that on their own crops. So it makes you wonder, just how long this crop cycle is going to be for tomatoes. So it looks good this year, possibly good again next year. So that'll have to see. But right now we're just waiting to see what yields are going to come in at and whether this crop gets done in time to be covered by insurance, which is the big risk. Other than that, stone fruit's in full production. Don't have any pricing on that yet. We'll try to get back to you with kind of some averages of what peaches, plums, apricots, things like that are doing. But the crop season got off to a late start. Fruit sizing was an issue in the beginning. It's kind of catching up now on these later varieties, and the guys are in full pick. So we'll have to see where that'll end up. But for the long and short of it, that seems to be it for crops here in California right now. And let's talk about nuts this week. A lot of heat this week, continuing, but not really putting much stress on these trees that are kind of past that danger point as far as heat goes. The next 30 days is really going to finish up that almond crop, though. I'll let those kernels kind of finalize out. Subjective estimate was a while ago, so now we've got the objective estimate that just came out. Subjective was higher, and the objective estimate is higher still, so 2.6 billion pounds, up over last year, which really pushes that carry out. That was looking to be about 750 million pounds into the 150 million pound range, when realistically we like to see about 500 million pounds from what people tell me. So it's putting some downward pressure on almond markets. There's kind of not a lot of activity around it, but it's putting downward pressure because you just got a lot of extra almonds coming in, a lot of good weights coming off. Nonpareil meats have been around the $180 range, in shell about the 220 range. Carmel, Butte Fritz varieties, things like that, about $120 or less. Just really tough to make money at that, especially in these orchards that got bought later in the cycle. These last kind of, I don't want to say Johnny come lately, but these investor groups and stuff that came in after the fact and really bought at high value and maybe carrying some debt. You kind of wonder what they're thinking right now with the crop prices for the third year in a row, kind of being at that break-even range. So we'll see how that goes. Walnuts, new crop, just saw the first sale for new crop, 2023 crop kind of go out. It was up about 10 cents to 8 cents over last year, but it's only one trade. We'll have to see more trades coming in, but it seems like a little bit of loosening up, but still about half of what production costs in those orchards producing those nuts would be. Walnuts just got a really tough uphill struggle to get a control on what the volume of nuts they've got as far as carry-in and continuing supply being grown out there is doing versus worldwide demand, and especially competitors, right? We have to get China growing twice the amount that we do now, where in prior years, 10 years ago, they were maybe equal to us. So just kind of a big, I'm going to call it flood, but a large glut of nuts in the market. Hopefully maybe see some acreages get pulled out or some crop failure someplace else, which is weird to think. But in farming, somebody else's bad day is your good day. So it's just how the world works. But walnuts going to be tough. next couple of years, I think. Price is just well below what it costs to produce them. And you kind of wonder what that's going to do stress-wise in the markets. I haven't seen a lot of orchards come up for sale or removal, but it's got to be coming. So you kind of wonder what guys are thinking there. Pistachio side, just kind of redirect you guys to, we have a nice pistachio report that was done by Mike Alamari, one of our affiliates. Feel free to kind of visit our website, at Ag Center News, and just look that report up. It gives a great overview of where the crop's been, where it's kind of at right now, and what pricing's been. Just to share with you guys, pistachio market's kind of an interesting market. It's really hard to find information on that stuff out there. Everybody holds it really close to the chest. So we'll try to get to a point where we do a better job of getting some pricing information on that every week, and find some partners that are willing to share that with us. But in a nutshell, that's what we got for nut markets here in California right now. Let's get on to interest rates. Rates came off about 0.1% this week. I think the markets had priced in this FOMC increases coming up next week into the market a little bit ahead of time, maybe a little higher than people were really thinking that rates are going to increase. FOMC, large consensus is that they're going to raise rates by a quarter point again. Inflation quite isn't down to the rate of increase that they like to see. It's about 3% annually. They'd like to see 2%. So there's a lot of folks that think they're definitely going to put another rate increase here to kind of cap that off, and possible another rate increase 60 to 70% based upon whatever group you listen to, again before the end of the year. So kind of push those things around. Mortgage rates on homes anywhere from the average between 7 to 7.5 range, 7.25 range. Again, that's average. Jumbo loans seem to be like in 6.5, 6.75% on the average range. And then farm mortgage rates on the variable side, 7.75, 7.65, all the way up to 8% on the 30-year money. The market's still inverted though. You've got short-term money, 30-day money at 5.3% with 5, 7, 10-year money on the bond side lower than that, right? So you have an inverted curve, right? My short-term rate's much higher than my long-term rate, which tells you, hey, we're going to head into the recession. Once it gets corrected, kind of get these rate decreases to get us back out of it again. So folks still believe that's going to happen. The strength of the yield curve has gotten deeper, though, which usually means there's a deeper recession than most people think is going to happen. We'll have to see where that goes. A lot of folks like myself don't really put much stock into some of the numbers. This core inflation number is much higher than this CPI number, which most people are quoting, is showing that the rate increases have worked. And a lot of us think, including myself, that it takes 6 to 7 to 9 months sometimes for a rate increase to really affect the market. So we'll see where that goes. And I think on the other backside, this has been kind of a profit inflation side, right? So people have higher prices on goods and services because the supply of those goods and services was not as ample as demand. And that's kind of corrected itself off. But now on the backside, people have been dealing with this inflation for quite a long time. And now you're starting to see wage inflation creep up. So real wages are up, not equal to the rate of inflation quite yet over time, but moving up. That's usually the response that you see. It's kind of this trickle down effect that happens with inflation, right? The folks at the top kind of get the benefit of it. I got inflation that's been caused by the markets, right? The FOMC creates inflation or kind of combats the inflation. It, gets the folks to make the profit at the top. And by the time it kind of filters down, it shrinks and hits the labor markets and finishes out. So we'll have to see where that all ends up in the long run. But these jobs reports really show that jobs are on a tear. A lot of folks like myself don't really believe that number and think that's a little bit inflated by some underemployment and some folks working second jobs if you really look at the data. So by that and the long and the short on what rates are doing, hopefully we'll see what the FOMC does next week if we're right or wrong with that rate increase. As always, thanks for listening and watching these reports. Hopefully they're helping you guys out and give you some information. Again, I'm always looking for questions and feedback from you guys as far as what you want to hear and anything I might be able to explain. I like doing that. I like to hear myself talk. I'm a dad. That's just what we do. I drink and know things, right? To copy a t-shirt. But I really appreciate it. So again, keep watching. Thanks again for your support. Please click the links, follow the follows, do whatever you got to do to kind of push these things forward and expand our audience and expand the feedback that I get, which makes me better at what I do as well. Thanks. Bye.